Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate filings. Today, we're diving into Atkore Incorporated's 2026 proxy statement. Now, proxy statements might sound dry, but they're actually packed with juicy details about how a company is run, who is in charge, and how they're spending your money if you are a shareholder. And let me tell you, this one has some particularly interesting financial tidbits and leadership insights. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below, where we break down more of these documents and discuss market trends. This document, a Schedule 14, a filing with the Securities and Exchange Commission, is essentially Atkore's official invitation to its annual shareholder meeting. It is where they lay out the agenda, introduce the folks they want to keep on the board of directors, and explain why they're asking for your vote. The first thing that jumps out is the record date for voting eligibility, the 2nd of December 2025. This means if you own shares on that day, you get a say in what happens at the 29th of January 2026 meeting. And speaking of the meeting, they're not just holding it online, it is a physical event at the Waldorf Astoria, Chicago. It is good to see companies still holding in-person gatherings, though with the convenience of online voting, it really begs the question of who actually shows up unless they've got a real point to make. Now, what are shareholders voting on? 3 key things: electing directors, a non-binding vote on executive pay, and ratifying their choice of auditor. The board is giving a big thumbs up to all 3 proposals, which is pretty typical. They want you to re-elect the current directors, approve the executive compensation packages we'll get to in a bit, and keep Deloitte and Touch LLP as their independent accountants. Atkore is framing its corporate governance around strong values like accountability, teamwork, integrity, respect, and excellence. They highlight things like an unclassified board, meaning all directors are up for election every year, which many investors prefer. They also emphasize that the chairman and CEO roles are separate, which is generally seen as a good governance practice by many investors. And importantly, they have policies against insider trading and against directors and officers hedging their stock, which should make shareholders feel a bit more comfortable. Alright, let's get to the part that really tells us what is going on under the hood, the financials. This proxy statement covers the fiscal year ending the 30th of September 2025. And while Atkore is talking about growth in previous years, the most recent year shows a bit of a downturn. Net sales dropped by about 11%. Which translates to over $350 million less in sales compared to the prior year. That is a significant dip, and it happened despite the company saying they achieved volume growth for the 3rd consecutive year. This suggests that while they might be selling more individual items, the prices they're getting for those items have fallen quite a bit, squeezing their overall revenue. The revenue drop directly impacted their bottom line. Net income took a massive hit, falling by nearly $488 million and turning their profit into a net loss of about $15 million. This is a big red flag. Not only did they lose money, but they went from making over $470 million to losing money. This is the kind of swing that makes investors sit up and pay attention. Even their cash flow from operations, which is usually a more stable indicator of a company's health, saw a significant decrease of over 26%. While they are still generating cash, that drop is substantial and likely a consequence of lower sales and profitability. They mention returning over 35% of cash flow to shareholders through buybacks and dividends. Which is nice, but you always want to see that operating cash flow growing, not shrinking. Now, let's talk executive compensation. This is where things often get interesting and sometimes controversial. Atkore is reporting a CEO to employee pay ratio of 167 to 1. This means for every dollar the CEO makes, the median employee makes about 16 cents. While this ratio is within what you might see for many large companies. The context of a net loss for the fiscal year makes the compensation packages for the top brass hard to swallow for many shareholders. Take the CEO, William E. Waltz Jr., his salary remained flat at $1.1 million. However, his stock awards totaled nearly $6.6 million for 2025, and his total compensation reached over $8.6 million. This is a massive amount of money, especially considering the company's financial performance. When you see such high compensation in a year with a net loss, it raises questions about whether the pay for performance model they tout is truly effective. The compensation discussion and analysis section tries to justify these numbers by highlighting that a significant portion of executive pay is at risk and tied to performance. They mention things like annual incentives and long-term equity awards that are supposed to align executive interests with shareholder interests. However, When you look at the actual performance numbers, especially that net loss of $15.2 million for the year, it becomes hard to see how those at-risk elements truly reflect the company's financial reality. In fact, looking back at their long-term incentive plans, the performance share unit awards for the 2023 to 2025 period achieved a 0% payout. This clearly shows that targets were missed, and yet the CEO and other top executives still received very substantial compensation, including large stock awards. It really makes you wonder if the targets were set too low or if the compensation structure is too generous regardless of the actual outcomes. On the governance side, Atkore highlights its commitment to sustainability and ESG, or environmental, social, and governance factors. They talk about things like reducing their environmental impact, fostering an inclusive leadership mindset, and human capital management. This is becoming increasingly important for investors, and it is good to see they're addressing these areas. However, the core of their business is still about making money, and the recent financial results suggest there are challenges on that front. Finally, they're asking shareholders to ratify Deloitte and Touch LLP as their independent auditor for the fiscal year ending September 2026. Auditors are crucial for ensuring financial accuracy and transparency. Deloitte and Touch has a long history with Atkore, and the audit committee seems comfortable with their performance and independence. The fees for these services are listed, with audit fees for 2025 coming in at a little over $3.4 million. This is a standard practice, and it is generally a routine vote for shareholders. So let's sum it up. Atkore Incorporated is facing some significant headwinds. Their revenue and net income have taken a substantial hit. While they're talking about strong governance and sustainability, the core financial performance is concerning. The high executive compensation in the face of these losses is definitely something shareholders should be questioning. It appears their pay-for performance model might need some serious recalibration. Or perhaps the targets themselves need to be more ambitious to truly reflect long-term shareholder value. The company's direction is currently facing challenges, and while they have strong governance practices, the financial results in the most recent fiscal year are a clear signal of weakness that needs to be addressed. Alright? That is our breakdown of Atkore's 2026 proxy filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.